Welcome back to another video. In this video I'm going to be talking about the ICT Silver Bullet and how you're going to want to trade it, what it is. So yeah, if you're unfamiliar with what the Silver Bullet is, or if you want to improve your trading knowledge on the ICT Silver Bullet, then this is definitely the video for you. Now, if you're unfamiliar with what the ICT Silver Bullet is, then all it is just a trading strategy that is very step by step and very mechanical and easy to learn. Really, it's very mechanical strategy. So yeah, that is what we are going to be talking about in this video. Now, all the ICT Silver Bullet is, it just uses displacement, fair value gaps, and liquidity, okay? So if you are unfamiliar with what those terms are, or you want to get more familiar with those terms, then this video is definitely going to help you. So the first step that you're going to want to know is where you're going to target with the ICT Silver Bullet. But before we get into that, actually, let me just tell you the times that you can trade the Silver Bullet. So you can trade the ICT Bullet from 10 a.m. to 11 a.m. Now this is New York, so UTC -5. These are the only times that you can trade the Silver Bullet. You cannot trade them any other time, so you can trade them 2 p.m. till 3 p.m. And 10 a.m. to 11 a.m. in New York time. Okay, you can't trade the Silver Bullet trade any other time. It just will not work nearly as good. Okay, that is when the macros are. If you trade this strategy and it is not in these times and you're confused why you're not seeing the results, then your simple answer is just because you're not trading it in these times. Now, I had someone come in my Discord the other day and say that they're wondering why the Silver Bullet isn't working, and it was actually because they were trading the wrong times. They were trading the 10 a.m. to 11 a.m. their time zone. So you need to make sure that this is UTC -5 or it's just New York time zone. Okay, so make sure you're on the New York time zone. If you don't know what that is, if you go to the bottom right and then you go to UTC -5, you'll see New York. Just click that, and then that will be your time zone. And then your time right here at the bottom right, that is the time that it is in New York now. Okay, so you're going to want to make sure you're trading from 10 a.m. till 11 a.m. or 2 p.m. till 3 p.m. Okay, and what are you going to target? Now, it's simple. With the ICT Silver Bullet, all you're targeting is opposing liquidity. Now, you might be wondering, what do I mean by opposing liquidity? Okay, let's say that we are looking at this price action here, okay? So let's mark out 10 a.m. starts there at that blue line till 11 a.m. Okay, so this is when we can trade this ICT Silver Bullet, and this is the example that we're going to be using. Now you might be wondering, how would I know if we are looking for shorts or looking for long positions in this case? Now, as you can see, we have been trending downwards a lot. We're trending downwards, even on the lower time frame. We haven't took out any really buy side liquidity yet, but we have taken out a lot of sell side liquidity down here, as you can see. Therefore, our Silver Bullet for this instance would be lungs, because that is the opposite liquidity. That is the opposing liquidity to where the liquidity has been taken already. If we go to replay mode and put the replay mode here, as you can see, we are just taking lots of sell side liquidity and we still have lots and lots of buy side liquidity left. Therefore, we are only looking for lungs in this instance, so that is what we will be targeting. Now you might be wondering, in the actual trade, where do we put our take profits? Now I'll get to that later in the video, but all you want to be able to do is notify where the liquidity is. So if you're unfamiliar with what liquidity is, there are 3 different types of main liquidity sources. You have swing highs and swing lows, which are just literally what it says, is a swing high, and then there is liquidity that comes off the swing high. So there's liquidity there, there's liquidity there, there's liquidity there. That is one type of liquidity. Then you have swing highs and then you have equal highs and equal lows, which looks something like that. Now all that is when the price action comes to the same point in the market more than once, taps it perfectly, and then carries on going in its designated direction and just leaves those equal highs up there. So that is called equal highs, and these are a very strong liquidity pool. And then you have a less common term of liquidity, and it is just trendline liquidity. Okay, now all trendline liquidity is also known as low resistance liquidity run, and it is just when you can put a perfect trend line on the charts, and there is just a lot of liquidity sitting below this point. Okay, so there are your three different types of liquidity if you're just unfamiliar with that. Now, jumping straight back into the next step. So after you got your targets and you know which direction you want price to go, you need to wait for some sort of displacement. Now, in this example, I'm going to show you something that you might not be used to seeing, or you've never seen anybody do before with the ICT Silver Bullet. So you want to pay attention here. So let's say we have our displacement, and the last step is, let me just do it now all in one go, is you need a fair value gap. Now you need the fair value gap to give you your entry, or to show you your entry. Now, why I am saying you need to show your entry, not really give you your entry, and that is because with the ICT Silver Bullet, you do not have to wait for the price action to come back into your fair value gap. You can't take a trade without it coming into the fair value gap. So let's say here we have some string displacement going up now. I'm just going to make that line very quite there we go. So we have some string displacement going up. We have our fair value gap created. Now, as I was saying, look, price comes back a bit, but it does not have to tap into our fair value gap. So I know some people who would enter around here just because they don't want to miss out on the trade, but they want to enter into the trade. So they'll enter in there. Their take profit would be, we have buy side liquidity here, so that might be their first take profit right there. And then we also have lots of liquidity sitting up here, so that might be their main take profit up here. Okay, so what I'm trying to say is a lot of people will wait for a pullback, but they might not think that the fair value gap is going to get filled. Now, what some people also like to do is enter when the fair value gap is opened. So as soon as the fair value gap is opened, some people will like to enter. Now that's not the best example to give with this specific price action, because as you can see, the fair value gap would have got opened up there, and that just wouldn't be a very good risk to reward. So for this instance, I actually would have waited for the fair value gap to get filled, and it doesn't get filled in this instance, so I wouldn't have entered into this silver bullet trade. But this is to just show you guys. But it does come very close. So if, let's say, price action comes that close to the silver bullet, and you, the sake of literally 1 point, the sake of 1.5 points, you do not want to miss out on a trade. You can just enter into the trade a bit prematurely, and then obviously have your targets set. But then there you go, that we actually do get another ICT entry, which is right here. So you do get another fair value gap created right here. That price taps into, so that could have been another silver bullet entry for you. Okay, so all you're going to want to remember is these three simple steps. And where most people go wrong is they enter prematurely. They don't wait for the real displacement and the real fair value gap. They see a tiny fair value gap with no displacement, and they like to enter into the trade. Now that is not how you trade. It's not what you want to do. You want to wait for the main fair value gap and only take a trade if there is a lot of displacement. Okay, and another question I get asked a lot about the silver bullet is, can you take a trade if the fair value gap is created before the 10 a.m. window? And the answer is yes, but if I was you, I would just wait until you are a lot more experienced by doing that. And so if you're a bit less experienced, just use it from the 10 a.m. till the 11 a.m. window, and don't take any more trades outside those windows. And yeah, thank you guys for watching. I hope you all enjoyed. Make sure to leave a like and subscribe and join my Discord in the description.